Zacks Rank Buys, stocks with a short-term buy or strong buy recommendation. Now, here are more Zacks Rank Buys. Let's check out the momentum on a couple of more stocks with Mike Vodicka, our momentum stock analyst at Zacks.com. And I guess the implication here is that momentum in the stocks that we talk about anyway is always to the upside.
It sure is. That's why we're talking about them.
All right. So don't disappoint me now.
I won't.
Don't make a liar out of me. Don't give me some momentum that's to the downside just to mess with me. Genoptix is the first one that you want to talk about. You've written about it recently. GXDX is the ticker symbol. Is this in the optical space? Is this an optical?
Well, it actually falls under the category of healthcare services, but more specifically than that, what they do is they provide laboratory testing services specifically related to hematology, which is blood, and oncology, which is related to cancer things.
Never would have guessed that from the name.
Yeah, it's kind of a funny name, but it's a fairly specialized business, and they've been experiencing some really nice growth. They've only been around since 1999, but it already has a market cap of $644 million, so they're definitely a fast-growing company.
Yeah.
And like it's kind of getting back to that a little bit, just recently we saw third quarter results November 5th. Their sales growth year over year was 58%. That's pretty impressive. It came in, sales came in at $51 million. Earnings per share came in at 53 cents. That was 19 cents ahead of the Zacks consensus estimate. And that's consistent with what they've been doing for the last year. They've been producing these really nice earnings surprises. Averaging 46% over the last year. Mm-hmm. They're able to improve their operating margin by 5% from last year, so that speaks of additional operational efficiencies, cost cutting. That's something lots of companies are paying attention to right now. And then after the good quarter, of course, we saw analysts bump their estimates up a little bit. The current year added 15 cents. It's at $1.62 right now, which means shares are trading at 23 times forward earnings. So that's a little bit of a premium to the overall market, but for a company like this, it's growing as quickly as it is. The multiples are consistently going to be higher than the overall market, so it kind of makes sense to be a little more pricey.
All right.
And then the last thing we talk about here is the chart. What we've seen is shares kind of bottomed out in right around August at $26. And since then, we've seen shares come up to about 38. So we see some pretty nice short-term gains, and the valuation picture still looks reasonable. So there, could still be some upside there.
All right. And then I know I've talked about this with one of the analysts in your group, and I want to say it was you, J. Crew Group, JCG, the ticker symbol, specialty retailer.
Yeah, I think I actually did talk about J. Crew before.
It's been a while, but I think we talked about it.
What brought them to my attention was, of course, they had a new quarter recently, but just to give a little bit more background, like you said, it is a high-end retailer. I've been around since 1988, so that's 20 years. That's a pretty decent history there, and market cap of $2.7 billion, so it's definitely a bigger company. But the last year has been challenging for all kinds of different retailers. We've seen definitely a big move towards more value-oriented, and J. Crew as a higher end kind of puts them in a precarious position. But they've responded to the market really nicely because they're growing their sales and they're growing their earnings too, and that's kind of makes them unique in this environment.
Yeah, sales up 14%, if I'm reading correctly.
Yeah. Just November 24th, third quarter results. That's their sales were up 14%, which is really solid
in this kind of an environment. Yeah.
Yeah, it was a really nice production there. Earnings came in at 67 cents. That was 9 cents ahead of the consensus estimate. And again, this company's beaten the every quarter last year by an average of 86%. So they're definitely exceeding the expectations of the analysts, which is nice. Mm-hmm. They improved their gross margins by 7% up to 48%. So that's a nice boost for them there. And they also built their cash position a little bit. Added $132 million, so now they have a cash and cash equivalents of $247 million. That gives them some nice flexibility there. Of course, we saw some upward movement on estimates after the quarter. The current year added 16 cents. It's at $1.74 right now, which means shares are trading at 25 times. That's a little bit pricey. It's a premium to the market. We haven't seen that slow the upward momentum yet, but it's something to consider for more value-oriented consumers or investors, I should say. And then finally, the last piece of the puzzle here is the chart, and really this chart is pretty amazing. Shares bottomed out at right about $9 in early March. And then recently we topped off at 46, so they're up big this year.
In what period of time did it make that climb?
It's about 9 months. It's up from
a pretty good climb for 9 months.
Yeah, it's a nice gain.
Yeah. All right, do you own either of these two?
No, I don't.
Check out other Zacks Rank Buy stock pick ideas in the momentum category and other investing categories written about on Zacks.com on our homepage in the upper right-hand corner. With Mike Vodicka, I'm Terry Ruffalo.